Nikkei, which is just marginally in the green. It's around 18 points higher right now.
Indus Towers has reported a loss for the first time ever. At the bottom line, there is a loss of 708 crores.
The U.S. market, the low is in October, we think, and I think this year will be a good year.
Just pivoting around that 18,000 mark on the index. The Adani Group is under pressure.
The US tech space has really done very well in the last couple of months, of course, from very sharp bottoms that we saw last year.
The Q3 new account acquisition has been around 1.6 million, which is a 60% growth as compared to last year.
The Nifty tanked 200 points, sensex lower by 650 points.
Hindenburg says that they hold short positions in India's Adani Group via US traded bonds and via non-Indian traded derivative instruments as well.
For us, Q3 has been as per expectations.
At one point, we were down almost 240 points or so. But all said and done, it's what, 1.5 or not even 1.5% cut, 1% actually after the recovery.
Star being a health insurance company to enter life insurance will be a big move for the company.
Nifty is down 196 points. We also have the Bank Nifty, which is the biggest loser.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell live from the CNBC-TV18 Motilal studios. I'm Prashant. With me in the studios, my colleagues Reema and Surabhi. Nigel joins in, as always, from the newsroom floor. Guys, hi. Good afternoon. Things are looking a little better as compared to how they were looking in the middle of the day. The markets picked up a little bit in terms of the losses. We're down 180, 190 points. And as we start, I think there is maybe just another small leg down which is appearing. In any case, I think what seems to have happened is that we have shifted once again closer to the lower end of the range that the market has been trading in as compared to the upper end. And the range is 17,800 on the downside and about 18,200 on the upside. There have been multiple kind of, attempts at taking out that 18,200, but so far not really. It's a tight range, and very quickly, just with one day's 200-point sell-off, we are closer to 17,800 than we are to 18,200. The big support for the Nifty really comes in. I mean, if you really want to focus on one big number, it's 200 points away. That is 17,761. And we'll see if that comes into play. Bank Nifty broke the 26th of December swing low, but has bounced off that level a little bit. That level is 41,569. So let's hope we actually close above that today. A closing below perhaps opens up more downside for the banks index. Mid caps and small caps, they've also moderated losses. They're down between 0.75% to 1.5% in trade. Market breadth is negative 1:3 in favor of declines at this point in time. Lots of chatter whether there is something in the budget or this is nervousness ahead of that, etc. It's tough to say, but at least from what we've been reporting, our colleagues from Delhi, etc., I don't think there is anything which at least is suggestive of the fact that some big changes on sort of capital market taxation or anything of that sort. It's obviously tough to say. We won't know till we know. But the fact is, so far we've not really picked anything as far as the budget is concerned. I guess the chatter is because we are just a few days away from that big event, middle of next week. Guys, hi.
Hi. It's just that this fall came from nowhere, right?
Yeah.
The Asian markets were fine. The opening was around levels of 18,000. We were directionless. We were sideways for so many days there, and suddenly slam dunk. Markets went down to levels of 17,850. And we're still unable to find out what the real reason for this fall was. The panic low was 17,850. So in a way, we've recovered from the day's low. We've not broken that long 1 month trading range. As Prashant indicated, the low, the 2023 low, or the big low that everyone's watching, is 17,700 thereabout. So we've not breached the big trading low. It's just that this has been a decisive move lower for our markets. Mid caps are underperforming. The advanced decline ratio is fairly weak. We've got 2 stocks in the green for 3 in the red. Today is, of course, the monthly options expiry for the January month. Talking about some individual losers, Cipla took a big leg down. Earnings reaction, knee-jerk. Stock is down close to about 4%. Muted earnings growth, muted top-line growth. Technology names have started selling off quite sharply. Pull up the intraday chart of Tech Mahindra. Pull up the intraday chart of even something like an HCL Tech, which has been strong post its Q3 numbers, and you would see a continuous slide. So even as the markets have recovered, recovered in the last 1 hour. In the technology names where profits have been made, you are seeing selling pressure. HDFC Bank, another case where profits were to be made. The stock was higher for 6 days in a row, and today it's come under pressure. And we spoke so much, right? Budget, it's typically positive for L&T. All the experts came on our channel and said, you know, L&T is the perfect India economy play. But L&T has been under pressure for the 4th day in a row in the run-up to the budget. So it's a 4-day decline coming through on that. On the gaining side today, Hindalco is at the day's high. HUL has been seeing buying amongst all the consumer names that have reported numbers so far. We've seen weakness for most of them. Either it's an account of that extended monsoon in the month of October, which ate away that festive sale, so it impacted in Asian Paints, Pidilite, Colgate, all those numbers were weak, except in HUL. And HUL is where you are seeing some buying. Other auto names like Bajaj Auto, Hero MotoCorp are also holding up quite nicely in the green right now. Some of the other mid-cap names which catch your attention, Indus Stars, maiden loss, stock down 6%, McDowell's, Pidilite, again, underscoring that perhaps consumer trend is weakening.
Well, Rima, you pretty much covered up the stocks. I just want to go back to the point. Frankly, this is not really surprising me for a change today, because we've been discussing this, and I think Prashant hit it on the head. It's nerves, right? It's nerves ahead of the budget. Do you really want to take open positions into the next series when you're at such a big event? Anything can happen. On tax, I've been speaking to a lot of people, on the tax consultancy side as well. I don't think anyone is saying listed equity capital gains change. No one is going with that. But nervousness, maybe. We've been hearing something on the buyback tax, some rationalization like we saw in DDT a couple of years back. But no, that would be an outlier. That would be a black swan if listed equity capital gains regime changes. But I guess nervousness nonetheless. Just to go back and look at the contribution, it's just very simple. There's nothing very meaningful on the upside to pull things higher, barring the auto stocks that Rima mentioned. Banks are where the pressure is. Banks are where the long unwinding has been happening. We saw that yesterday. It's continuing today as well. And obviously, there's Reliance on the other side. So you've got, yes, lever fighting on one end, some metals, and definitely the autos. But banks are so heavy that the net result is on our screen. By the way, we are down again. So the day's low was around 17,840 thereabouts, 848 thereabouts. And we're again down 218. So let's see 1 hour to go whether this again exacerbates on the way down. Nigel, hi, what are you looking at? I know you're looking at a lot of the levels today, and levels are very important on a day like today, so fill us in.
Well, that's right. You know, since we have the last 60 minutes of just this expiry itself, I'm looking at the expiry level, and I think we're very, very close to the bottom end of it. So, you know, I know the day's low was at around 17,850 or thereabouts, the number that you just mentioned. But 17,875, that's extremely crucial, in my opinion. You know, and on the upside, I don't think we're talking about that. But the range seems to be this 100-point range. Now, the downside, I'll tell you why. 17,900 put, well, it's very, very active in today's trading session. The premium is around 20 rupees. At the high of today, the premium was 99 rupees. You know, so there was a mix of activity taking place at that level. For those writers, they look to protect this 17,875 odd mark. Upper level, no one's talking about it, but 17,950, well, positioning is such that we shouldn't be getting past that, going by the action on the call side. By the way, all of us are talking about the Nifty, but the Nifty Bank has come in for a special hit today. So that's down close to around 2.5%. And I'll tell you what, on the Nifty, the 17,750 has held out, and we have bounced from those levels numerous times. But on the Nifty Bank, this 41,650 to 41,700, that's been a good support zone. So the odds are that that could hold out. We're not out of the woods, but at least for today's trading session, you know, these levels should hold out. 17,875, and on the Nifty Bank, 41,650 odd. Back to you guys.
Okay, interesting there. Let's tell our viewers what we have on the show today. A whole host of auto and auto ancillary stocks are surging in trade. What's aiding the up move? A quick check on the stocks coming up.
Indus Towers hurts on a key client default, reports its first ever quarterly loss as it sets aside nearly 2,300 crore rupees to provide for a telecom company's dues. All the details coming up.
Pidilite and SBI cards under pressure on the back of weak Q3 earnings. We'll get you the key management takeaways.
And we'll also talk stocks and top portfolio calls with our alpha manager, Ajay Vora of Novuma Asset Management.
Okay, that's the lineup here over the next 60 minutes. How should you position yourself in the last hour of trade? Rahul Mohinder of Viratech.com is